Okay.
Okay, everybody, cool deal. So I am going to recap 2020 from a financial standpoint on tonight's Zoom call. And um, I'm going to try to do it and not take up a whole lot of time doing it. I did pull up a lot of links, charts, and graphs and stuff to kind of help illustrate some of the points I want to get across. I also pulled up Forex Factory. Um, you guys know, for those who've been on the call with us, that's where we kind of start from a fundamental standpoint. For those who haven't been on the call with us before, welcome. And I'm going to show you what Forex Factory is all about. So this website is forexfactory.com, and this is just one of the websites you can go to get news and just kind of keep up on what's going on in the marketplace, what's going on in the economy. So whenever you first come to this website, it's only going to show you the news for the current day. I pulled up the monthly calendar and went all the way back to January just so that we could take a look and just really see like what happened. All right, so this is January of 2020. One of the things I want to say is a lot of the things that were that kind of um, functioned as the catalyst for what happened in 2020 really didn't happen in 2020. We have to look back to last year. So really around October of 2019 is when it all just really started. Um, our Fed was kind of doing a lot of stuff with the dollar and fiscal spending around that time. But then also, that was when you really first started hearing about the coronavirus. You started hearing about an outbreak here, an outbreak there. You started hearing about people in China being sick and restricted movement starting to happen. And no one really knew what COVID was, what the coronavirus was at that time. We started to hear more and more about it as the year went on. In December, it really became more of a thing. Um, and that's when a lot of countries really started to take note of okay, the coronavirus, COVID 19, it's something big. We should really pay attention to it. But the World Health Organization didn't actually classify it as a pandemic and classify it as something that should really be noteworthy until January of 2020. So, um, taking all of that into consideration, a lot of what happened with our economy, a lot of what happened with our dollar started happening last year. So, when we're looking at this Forex Factory calendar for January, just know that a lot of things that happened here were already happening like months before. So on this calendar, we get the holidays, we get really important news items. So the gray items that you see are typically going to be holidays. Um, so sorry, let me go back. So on the first column, you have the date and you have the time that the news will come out. It tells you the currency that's going to be affected and the impact. So gray is minimal impact. Yellow is low, orange is moderate or medium, and then red is high. And these envelopes over here are really important because you can actually click on those and it will give you links. It will drop down and give you a history of that news item. It will give you links that you can click on to actually find out more about that item. You can actually go directly to the website for the government agency that puts out that news. Read it. You can look at all the charts. You can look at whatever they choose to release. You can get all that information just from clicking on that one envelope. And then In addition to that, down here, it'll tell you why it matters. It'll tell you how to look at the news. So it gives you all that information whenever you click on that envelope. And then when you're ready to condense it, you can click on the gray X and it goes away. So also on this page, if you don't want to click on it and you just kind of want to figure out what's going on right now, when the news is getting ready to come out, there won't be anything here, but there will be something in the forecast, and that's what is predicted to come out. And the very last column is what came out the very last time that news item came out. Then, like for instance, this news item here at 9:45 p.m., then a number would pop up because that's when the actual news item is coming out, and it tells you there what it's going to be. And then the key is to compare it to the forecast. So what were they predicting and then what actually happened? And that can kind of help you from a fundamental standpoint, kind of determine which way the market could possibly go. But then you also need to pair it with your technical analysis also. So just going through this calendar for January, now that you know like what some of these items are, as far as like how to look at it on here, I'm going to go through and really pick out the items that you guys need to focus on going into 2021, like showing you what's important, what's repetitive, because I'm going to click through every month of this year. I'm not going to spend a lot of time on every month, but I want you to see how repetitive some of these news items are. So if you don't celebrate holidays, that's fine, but it's important to know when the holidays are on the calendar because markets respond or don't respond in regards to holidays. So typically on holidays, the markets aren't open, they don't trade. So depending on what you're trading, you have to know whether or not it's a holiday. And if it's a holiday, know that, for instance, if you trade gold or if you trade the indices like US 30, just know that it won't trade on that day. And that's important to know, like I said, because if you're in a trade, let's say, for instance, you got into a trade on Tuesday and you plan to hold that trade, well, just know that on Wednesday, your trade isn't going to be doing anything because the market's not open. So, finding those news items, like I said, know the holidays, just mark them on your calendar, and just take note of it. ISM manufacturing numbers are an important number that we will be taking a look at. I'm not going to focus on it here. I just wanted to make note of it because this isn't a typical week. Um, what really should be here that's not here is jobs numbers. Job numbers always come out on the very first Friday of the month. But it didn't on this week because it was a holiday week. It was technically what they call a short week for trading. And on the short weeks or when there's an abbreviated week in trading, they typically move it to the next week. But I wanted to show you ISM manufacturing because ISM manufacturing always comes out on the same week as um, non-farm payroll, which is the jobs numbers. FOMC, that's our Fed, that's our open market committee. That committee consists of Jerome Powell, who was our Fed chair. He will continue to be our Fed chair until 2022 or 2023. And then all of the Fed chair presidents. So there are about 12 regions in the United States. They all come together. They all make decisions about our money, about our dollar, about interest rates. So that affects your credit card rates, your mortgage rates, your auto loan rates. That affects the rates that you get at the bank off of a savings account or a checking account. So they have input on all of that. They actually make the decision on what those interest rates can be. So anytime you see FOMC, pay attention. Um, let me clarify that. Anytime you see FOMC in its minutes, if it says Fed chair, pay attention to those, and then I'll also show you some of the other things to look out for with FOMC as we go through the year. So scrolling through the second week, it will tell you when the president is going to have a speech. Typically, those are always going to be read. Always pay attention to when the president speaks. When the president speaks, you are going to get strong movements in the market. You're going to get a lot of times you don't know what the president's going to say. You don't know how they're going to respond to questions that the media and the journalists that are there might ask. So always pay attention to presidential news items. They have a way of moving the market um, the complete opposite of what you thought, or it might help to propel your trade in the direction that you thought it might go in. So, anytime the president speaks, anytime the president tweets, um, just make sure you look at your trades. Just take a glance at them. Make sure that you have everything in place to secure and protect your trades. So this is the jobs information I was talking about. Jobs numbers are always going to be read. They always come with 3 news items. So typically, like I said, this news item happens on the first Friday of every month. You're always going to get average hourly earnings. You're always going to get the unemployment rate, and you're always going to get the employment change for the United States. So when we look at January, we can see that we already had started to see some of the effects of COVID in the first week, because a lot of the hard hitting news for COVID really happened in December. So we started losing jobs. The unemployment rate was about the same, and average earnings had started to slip a little bit. Part of that too is because a lot of seasonal workers are cut or are let go towards the end of the holiday season. So whenever we look whenever we're looking at these numbers, we also take things like that into consideration. How do I know that seasonal workers were taken into consideration with these numbers? If you click on this envelope, it will bring up the link for the Bureau of Labor Statistics. You can actually click on that link and it will bring up the whole jobs report. It's about anywhere from 45 to 60 pages every time it comes out. And you can actually see, it'll give you a list of full-time, part-time, seasonal workers, transient workers, temp agencies. It tells you where the jobs were gained and where they were lost during that time period. And I just know because I had already read it earlier in the year. So the key thing we're going to take away from January is just knowing how to get to the Forex Factory calendar, how to read these news items, even if you don't know what it is, just knowing, okay, if this news item affects this currency, it's low impact news, and I can click this envelope to find out how to find out more about it. So I'm kind of skipping some of these items because we're going to see them again. All right, so here we go. The FOMC. This is the news items that I'm telling you about for the FOMC that are super important. In addition to seeing the news items that you saw previously, FOMC statement, Fed's fund rate or Fed bank rate, and then FOMC press conference. Those are going to be the news items you want to look out for. More times than not, these are going to be read. I had to think about what I was going to say, because recently these have been orange and yellow, only because our Fed has said that the rates were going to stay the same for the next several years. So there's nothing to really think about with these rates. But earlier in the year, we didn't know. And they were really high impact news because the Fed was making decisions about our interest rates that were really going to affect how this year progressed along. So at the beginning of the year, our Fed's fund rate was 1.75%. It is nowhere near that now. It's like 0.25%. So they've dropped the rate considerably since the beginning of the year. And whenever you click on these envelopes for the FOMC, it will actually take you to their website, to the Federal Reserve. You can read these statements, you can watch the video. They have graphs and charts and things you can look at. But every month, we get at least one news item from them. And I feel like this year we've gotten several from the Fed every month. All right, so moving on to February. I'm not going to spend a whole lot of time on February. I just want to show you guys what I was talking about with the first Friday of every month. So here's that ISM manufacturing number. It comes out on Mondays before the job number. And this is a typical jobs week. So it's the ISM number that comes out on Monday, and that's for manufacturing. On Wednesday, we get the ISM services number, and then we get a preliminary jobs number. So we always get a preliminary jobs number prior to the actual job number coming out on the first week of the month. And the ISM manufacturing and services numbers, they are numbers that really pertain to businesses. So when we're looking at these businesses and we're looking at services in the United States, we want to know how much are they putting out, what are they bringing in, how are they really affecting our economy. That's what those numbers are showing us. And the biggest thing I want you guys to remember and take away from all of these things that all of these news items, the biggest takeaway is that people need jobs. That's why we focus on the job numbers on the first week of the month. We focus on job numbers because people need money to spend to make the economy keep going. So the economy contracts or shrinks if people don't spend money. That's why now in December you hear our Fed and our Congress, the president talking about stimulus packages. They're called stimulus packages to stimulate the economy, to give people money so that they can spend the money to keep the economy stimulated. So that's why all of that's important. It's always important to keep money in the hands of the people, to keep people employed so that they can have money, so that they can spend money to keep the economy going. And part of the economy going is jobs and services and industries so that they can make profits, so that they can pay the people, so that people can spend money. So you see how it's a huge circle. So that's why this is important. Also, um, every week we get crude oil numbers. We haven't really paid a whole lot of attention to oil recently, but oil is important because oil fuels a lot of things. Crude oil consists of the oil that goes into plastic, the oil that goes into your car. Part of it is the oil that goes into heating homes. So it consists of a lot. It helps to determine the price of what you're going to pay for certain products, what you're going to pay for gasoline, kerosene, jet fuel. It's going to affect the price of that plane ticket. It affects a lot of things. So we take a glance at it every week. We look at it. We figure out like, okay, are companies, are these organizations that drill for this oil, are they hoarding oil or are they giving it away? Giving it away meaning, are they releasing it so that people can actually use it, or they holding on to it thinking that something's going to happen. And here you can actually see that we started holding on to oil. It was predicted that we were going to have 2.9 million barrels in reserves, and we actually had 3.4. People were starting to get scared at this time because it's like, okay, we've been hearing about COVID. The World Health Organization has deemed this a pandemic, and there was a lot of talks about travel, what was going to happen with the flow of people across the globe. So a lot of corporations and privately held companies started to hold on to oil, and that's not a good thing. So you never want to see, if you trade oil, you never want to see this number red if you're hoping that oil prices are going to continue to go up, because they're not. Moving on. You'll see oil every Thursday. Typically, oil is every Thursday unless it's a short week. Um, One thing that we did see in 2020 was a lot of speeches from government officials. We saw speeches from the head of the European Central Bank. We saw a lot of speeches from our own Jerome Powell here in the United States. We saw speeches and heard speeches from the head of the Bank of Japan, Mr. Karuta. So we heard and like started to see a lot more of these people. Typically, they only come out of their little box whenever it's time for them to do their monthly or quarterly thing, and then they go away. We don't see them, but we saw a lot more of them this year, rightfully so, because there was a lot of things going on that were unprecedented that we needed to hear from them about, especially when it came to how are these economies going to run during a shutdown, what's going to happen with the money supply, how are the economies going to continue to run. So we started to hear a lot from these bank officials and government officials just about these things. So as we scroll through 2020, we'll see a lot of these red items from bank officials. And I think this was one of the weeks we actually heard from every bank official from every currency that we look at. One of the other news items I wanted to point out and show you is the CPI. It's the Consumer Price Index. The Consumer Price Index is important because whenever you go into the store, if, let's say, for instance, you go into a store, or you went into the store, I should say, February the 13th, this day, and you saw a candy bar and you're like, oh, that candy bar is 89 cents, I'll get it. And then let's say you went into the store today and you saw that exact same candy bar, same company, same size, same packaging, but instead of it being 89 cents, it's now $1.09. The Consumer Price Index measures that. It measures inflation. It measures how much prices have changed in certain items. It doesn't necessarily say a candy bar, but it will say like automobiles, lighting, um, snack foods, drinks, meat, dairy products. It groups things into categories to show how much prices have changed. And whenever we look at those ISM numbers that I mentioned earlier, you can see how much it actually costs for a company to buy the materials, to make the item, how much it truly costs for them to make the item, including labor, their building costs, all the bills they incur at the facility, and then how much they sell it for. And then you see how much the consumer is paying for it. And then part of the job numbers, as I told you earlier, is the average hourly earnings. So you're able to see, okay, how much is a person making? How much is a person going to spend for an everyday item? And then how much is their job that's paying them? How much does it cost for them to make the item? So, like if a person worked at the candy bar manufacturer and they're getting paid $10 an hour, like, okay, the person's getting paid $10 an hour. This candy bar is $1.09, and it only costs, the company 30 cents to make it. Then all of those numbers can start to be put together, and then people like Jerome Powell, people in the Treasury, they can help to kind of make decisions so that they can say, all right, let's give the people more money, or let's give the businesses an incentive to pay the people more money. So that's how all of that kind of comes together to help decisions get made for the people. It doesn't always feel like it, but that's some of the thought process that happens. And the next big item I'm going to touch on is retail sales. So CPI, the consumer price index, and then retail sales, these happen every month. So you'll see these on every calendar. For retail sales, and retail sales are important because this actually will then show, all right, going back to this news item, that candy bar went from 89 cents to $1.09. These retail sales numbers are going to show, are people actually buying the candy bar anymore? So it'll show the economists like, okay, prices have gone up. People aren't buying the item anymore. So it'll start to show economists that there's a problem because people aren't spending money. This is that element right here that helps Jerome Powell, our Treasury secretaries, our economists that help them to make the decisions. That's one of the key numbers that helps them to say, like, okay, we got a problem because people aren't spending money right now. People are making money, but they're not spending money. Or they can look and say, okay, people aren't making money and people aren't spending money. The big thing about core retail sales, it says a lot, because when people don't spend money, they're scared. Typically, in an economy where people are happy, where people feel secure with their jobs, they feel secure with their income, they spend money. We saw that like back in the 90s with the Clinton administration, whenever they started giving out a lot of credit and they talked about how the economy was booming, people spent money. But at the end of the Bush administration, the beginning of the Obama administration, when we had the economic downturn, people were scared. People were fearful. People were losing their jobs. The economy was going downhill and people quit spending money. They were scared to spend money. So the economy had to be stimulated, but it wasn't stimulated directly to the people. It was stimulated to business. And that is how they drove retail sales during that time. But as you can see, this number is loaded. So whenever we look at retail sales, it tells us a lot about the psychology of the people, tells us a lot about what is going to happen. Retail sales during February, especially with it being month over month, meaning it's a number we look at every month and we're comparing um, one month to the month prior. February is one of those months where we're supposed to see an increase. We're not supposed to have a stagnant spending month. We're supposed to still see people spending money, and we did not see that happen here, which was a problem. And it was a problem because we know going into March and April and May that our economy just fell off a cliff. So now that I've gone through a lot of the major news items, now I'm just going to kind of talk about what happened during these months. So in March, we really started to see a lot of the true effects of COVID start to happen. We started to see a lot of shutdowns. We started to see a lot of governments have to step in and start taking action. A lot of governments had never been in this position before. They'd never been in a position where they had to cut rates so drastically, so fast, and it was uncharted territory. They didn't know what was going to happen if they cut rates by a certain amount and they gave out stimulus. and they did this, and they did that. So everybody was just kind of following the leader. And who was the leader at this time? The US. So the US was out there, and yeah, we had to set the precedence for what everybody else was going to do. So this is one thing that I wanted to point out. So the jobs numbers that came out in March, these are the job numbers for February, because it tells us what happened in the month before. Um, these numbers were actually not bad. These were really good jobs numbers, and they were like the biggest fake out of that time of the year. There was a lot of temporary employment employment going on at the time. There was a lot of transitional employment going on at the time. So it really looked like we were doing good. And really, this was a big cover up for everything that was to follow. And I don't want to say cover up in a conspiracy type of way. I mean, just like it gave us a false impression of what was really going on. So, I took some cliff notes, just from my charts and stuff that um, I've done throughout the year. So I'm just going to kind of stop scrolling for 1 second and just um, kind of tell you guys about just what really happened in 2020. So in 2020, we went from being in like a really big bullish market, which means the market's going up. That halted. It's almost like climbing to the top of the mountain and then getting to the top, realizing there's nothing left and there's nowhere else to go but down. That's what happened with our economy. So we saw the biggest halt to an economy we've ever seen. We saw the biggest swing in how much our economy for the US brings in and puts out. We saw the sharpest spike up in the unemployment rate that we've ever seen. And our Fed literally had to come to the rescue. So, um, just in the first quarter, or I should say the first half of the year, over $3 trillion was printed. And pretty much this was like over the course of really like 4 months, because we didn't need it in January, didn't need it in February. The money that they printed really started getting printed in March. So from like March all the way to like June, July-ish, we had tons of money being printed. And it was, like I said, over $3 trillion. So this money wasn't something to just look at in a light sort of fashion. Anytime we talk about a stimulus package, anytime we talk about the Fed printing money, that means that the value of the dollar is going down, because they're just printing money. They can print money whenever they want to, and at that point in time in an amount that they wanted to, because they didn't know how much we were going to need. So the very first stimulus package, the CARES Act that they put out, they just printed the money. And so um whenever you look at what the value of your dollar was, let's say in January, compared to what the value of your dollar is now, it's a lot less, just because of that one act that happened. One of the other things that happened this year in April is we saw oil go into negative prices. So in April and May of this year, we saw some of the lowest oil prices that we had seen in a while, because oil prices went negative. Um, Oil prices went negative, and they went negative by $37. That was the first time that that had ever happened, ever. A lot of that happened because oil inventories built up. So as you can see here, um, we almost had double the amount of oil in reserves that we were supposed to have, or that they wanted to have. Um, and so that wasn't a great thing. A lot of it came from, at that point in time, they had shut down air traffic, travel across the globe. So That there again, that's another reason why we pay attention to these numbers. For the trader of oil, especially those who expect oil prices to go up, this number isn't good. But for the consumer, for the everyday person who's just going to fill up their car, this is great because this means that gasoline prices should be going down. And like I said, whenever oil prices went negative, we did see oil prices and gasoline prices drop to lows that we hadn't seen in quite a while. I'm just scrolling through now to see if there's anything about oil or um, the economy that's on the calendar that I may have missed. I don't think so. Yeah, so as you're looking at this, you see that there's a lot of red. There were a lot of emergency press conferences being held, a lot of rate changes, a lot of news about our economy that was coming out during this time. So um, April was one of those months where, looking at it from a job standpoint, looking at it from um, just an economical standpoint, period, April was horrible. April was not a good month for our economy. Our interest rates, as you can see, the Fed's fund rate was dropped to 0.25%. That was done hoping to stimulate the economy, not only from the consumer standpoint, which is like everyday people, but also for businesses, because businesses would then be able to um, get items and borrow money at a cheaper rate. I see this GDP number here. I know a lot of you probably see it and you're wondering what it is. I'm not going to cover that yet. Um, it's going to be one of those news items that we cover some other time, just because it can it involves a lot. It has a lot of moving parts to it, but just know that it's important. Unemployment claims, these numbers started going up. So Um, I didn't talk about unemployment claims earlier. Unemployment claims is another number that comes out every Thursday. It's a number that we look at um, quite intensely. We look at it because unemployment claims are grouped together. They're collected um, by the Bureau of Labor Statistics from every state, and they look at how many people, new people, not people who are already on the system, but these are new people to the unemployment system. How many new unemployment claims have there been this week? And during this time, we started to see those numbers climb. And then as we continue to move through the calendar, you'll see that the unemployment rate started going up. So again, 2020 was a rough year. I don't think that needs um, to be said. I know a lot of people felt it. And if you didn't personally feel it, you knew of someone who did. So I'm just going to really scroll through now. A lot of the impact that I'm wanting to show you and things that I want you to see um, probably happen more around June. Um, yes. So unemployment rate in May was still relatively okay. Um, at one point in time, our unemployment rate hit somewhere between 16 and 17%. So those numbers weren't great. So you look here at our unemployment rate for the month of June, unemployment rate was 13%. It was predicted that it would be 19%, and then in the month prior, it was 14.7%. So here, this is where this little chart and clicking on the envelope comes in handy, because you can actually just go back and see for the past few months what it was. So we went from having a 3.5% unemployment rate, which was one of the lowest unemployment rates we had had in history, to having, now we're reaching the highest in the same year. So when we look at 2020, we had swings from being like some of the best ever to being the worst ever, all at the same time. All right, so this is August. A lot of the same, the typical news items. One of the things I wanted you guys to see is that there are news items in here that in previous months could have been red, and they're now yellow. Some of these Fed members that are now here in the speeches, they're not red anymore. That's because whenever these news items come out, it's so important to listen to whether or not these Fed officials think these news items are going to be short term or long term. When the Fed changed the interest rate to 0.25%, the news item that I showed you guys earlier, they had already said that they were going to take a look at that towards the end of the year, and that they were thinking they were going to keep that rate the same indefinitely until we got through COVID. So that news item, whenever you see it again, it's not going to be red. It's not going to be the flashy news item that we once saw it to be, only because they already told you how long they were going to keep that in effect. I'm not going to talk a whole lot about OPEC, but one thing I want you guys to know is that OPEC, which is a group of countries that control a lot of the oil production in the world, um, they they come together, they talk about oil production, how much they're going to produce. That in return affects oil prices. That's what I want you guys to take away from that for right now, is that anytime OPEC talks, go check out oil prices. So now we're getting towards the end of the year, we're getting towards September, and a lot of the things that have happened earlier in the year are still in effect. So these interest rates are still in effect. A lot of the stimulus that the government has done, they're now looking to see how well has this stimulus worked. So they're just kind of sitting back watching. They're looking at all these economic numbers. So being in December, looking back, now seeing that the government's having to do another stimulus package, and people are like, well, they could have done another stimulus package earlier than that, or they could have given out more money. The way our economy is set up, it's not set up to do that, because one thing you have to realize about our economy, and the thing you have to realize about our dollar, is that it's not based on anything. So had the government given out, let's say, $2,000 or $2,500 checks the very first time, and then turned around in July, and gave out more money, and then turned around in September and gave out more money, and then gave out more money in November, you're literally diluting the currency every time you do it. If you think about our currency being a pitcher of tea, and let's say that pitcher of tea is like really concentrated, it's nice, it's sweet, has like it's everything you want it to be. But then every time you give a stimulus, every $1 trillion of stimulus is like a cup of water, and you're pouring it into that tea. Well, eventually it's going to be super diluted. It's not even going to taste like tea anymore. It's not going to be sweet. You're not going to like it. That's what happens with our dollar. Like our dollar, nice, crisp dollar, you see it as a dollar. If you reach into your pocket right now, that paper dollar, you look at it as a dollar, you see it as a dollar. If you go to sleep and wake up, it's still going to be a dollar. It's still going to be a piece of paper with a dollar written on it. But when you go to the store, that's when your dollar isn't a dollar anymore, because of the example I gave you earlier of that candy bar changing from 89 cents to $1.09. That's when the value of your dollar changes from really looking like a dollar to being like 85 cents. Right now it's about 90.2 cents. Your dollar is never really a dollar. You have to constantly check to see what the value of your dollar is. It hasn't been a full dollar in a really long time. So whenever we look at those stimuluses, whenever we talk about, why didn't the government do more? It's because of the fact that if they had done more, even if you had they could have given you $5,000. But because they gave everybody $5,000, now that money is really the equivalent of having like $500 had they not given everybody so much. So just remember, like the stimulus money, it looks good, it sounds good. You think about all the stuff you can do with it, but you're chipping away at how much it's actually worth the bigger the stimulus amount gets. So I know I'm skipping a little bit ahead, but like now we're in December and we're trying to debate $600 versus $2,000. I see the need, and I know and I understand why people need $2,000. But if that $2,000 isn't used for how the government is planning for the people to use that $2,000 isn't going to work. The whole stimulus package just goes down the drain. The whole point of the $2,000 is to stimulate the economy. They need for people to spend that money, and they know that they're giving people this money to spend. People could possibly spend it on rent. They don't want people to spend their money on rent, believe it or not. That's not going to stimulate the economy, because they've already given the banks their money to help them stay afloat. So giving the banks money isn't going to stimulate the economy. They want people to really go out and spend this money in the stores. But people aren't thinking about spending that money in the stores right now. A lot of people are thinking about bills. Paying bills isn't going to stimulate the economy. A lot of people are thinking about paying off debt. That's not going to stimulate the economy. Although those are the smartest ways to spend the stimulus money, that's not how the money is intended to be spent. So, like now that we're in September and the government is trying to assess, like, now that we're in September on the Forex Factory calendar, and at that point in time, the government was trying to assess, okay, like, let's figure out how well these interest rate changes have worked. Let's figure out, like, okay, how are we in good standing with the people? Like, what do the people need? There were a lot of people that said at this point in time that there doesn't need to be another stimulus. There doesn't need to be more money. There doesn't need to be anything else done, because that was perfect. We just need to keep writing it out to see how it's working. Why? because the economic numbers were good. The economic numbers had started to turn around. People had really started to see like, okay, um, we're coming out of this thing. We're okay. So a lot of people were just on the stance of let me just stand back and see how well the stimulus works, and let's just leave it alone, let it be. So October starts the very beginning of the spending season. It's October, so that's when people are spending for Halloween. They're starting to spend for more so for the fall and winter. They're starting to switch over to winter heating. They're starting to buy more blankets and bedding and that sort of thing. So you start to see spending ramp up, or you should start to see spending ramp up in October. But now, being in December, looking back, we saw that that wasn't really happening like it should have been happening. Average hourly earnings were down. We did not create the jobs that we thought we were going to create during this time of the year. Unemployment rate was now down into the single digits, but it was still high. So there was a lot going on in October that showed us that we were possibly going to need another stimulus. Then November comes around, and um, you know, I haven't even talked about COVID cases, but we've roller coaster through with COVID cases. In November, um, what happened was we got kind of like a second wave, or we were in the midst of a second wave of COVID. There were a lot of people that had already predicted that we could possibly see this whenever we had the initial wave of COVID come through. And that was just because of history. History repeats itself, the Spanish flu, and, now COVID, and we don't learn from history. We tend not to learn from history. So, November, we have our second wave, and people aren't able to go out, people aren't able to spend. Um, it's just a lot of bottlenecking going on. So, um, as far as the Forex Factory is concerned, there's not a whole lot that changed. We had our election, um, and we're still trying to figure out the winner of the election somehow. We're now at the very end of the year, and Joe Biden won in November. We have contested elections. We have um, the process of the election still possibly trying to go through state courts and Supreme Court. But our election happened, and that was one of the highlights of the year for the markets, um, other than COVID, because we always look forward to the presidential election year. We always look forward to what could possibly happen with the markets. And then now we're in December. So now we get to the good part. So now that you've heard me like bore you to death about what happened in 2020, I'm going to now tell you, especially since we're like at the end of the year, I'm just going to skip down to the very end. Like, what now? Like, we've been through all of this. We've been through COVID. We've been through the presidential election. We've been through, stimulus packages. So, um, so to finish with the stimulus package topic really quick, Trump signed the $900 billion stimulus package, but currently the provision for the individual checks is going through Congress. So the House has passed it. We still need the Senate to pass it before it actually happens. So $600 checks are a done deal. Trump has already signed that. That was already approved. The $600 is a given. We know that. $2,000 checks, we're waiting. So you have to wait until tomorrow for for the Senate to vote on it, because the House voted on it today, passed it. Need to wait for the Senate. Once the Senate passes it, what's going to happen is the difference between the two is going to be given. So $600 checks, like I said, it's a given. If the Senate comes back and says, okay, yeah, we'll do $2,000, then if checks have already started going out for $600, checks are going to continue to go out for $600. Then the difference is going to be given. So $1,400 is then going to be given later. It sounds like a waste, especially for those people who have to receive it by card or by paper. But for them, the government, logistically, to keep it in order for them, they're going to do it that way. So then people don't feel like they were getting cheated or people got two checks for 2,000 or whatever. Um, all of that jazz. So that's what we're waiting on from the Senate. So if you are a stock trader, one thing that I'm going to be looking forward to, especially if it's confirmed that Biden is president and if he gets his way with a lot of things, um, guns, gun stocks, steel, aluminum, I'm definitely going to be taking a look at those. I expect for prices of those to go up. Um, During a Democratic administration, I always anticipate that gun sales, gun prices, and the metals that are used to make them and the ammo go up because Democrats tend to be really restrictive on guns and gun laws. And if you've paid attention to um, a lot of the proposals from the new administration or the administration to come, they want to put a lot of restrictions on guns. So definitely paying attention to that. I'm paying attention to industry. So that's going to be like coal and transportation. Transportation does include like Tesla and the car manufacturers. Paying attention to those because there are a lot of provisions in the laws coming up with this new administration that actually help those industries, especially Tesla, because if you own an electric vehicle, there are special tax write-offs and provisions that you get, not only for the consumer, but for the company that makes them. Also, financials. I'll be looking at financials to do pretty well going into the new year, just solely because of all the money that they've been given by the government, all the provisions that they've been given for the Fed to do buybacks and stuff. So definitely be taking a look at those. And then discretionary spending and consumer staples. Um, Staple items, I won't really be looking at as much as discretionary spending, but I will be looking for people to spend money because you are giving people a stimulus. The hope is that they spend this money. The hope is that they go out and buy things. So, thought process is people have been in their houses for most of the year. People, especially that have kids, have been in the house. Things have gotten torn up. Things need to get replaced. Um, like furniture items and computers, tablets, since people are going to be, possibly spending the first semester of school um, on the computer or at home. Definitely looking for things like that to get replaced in the beginning of the year. And let's see what else. Energy. Sorry. Energy. So energy, when I speak of energy, I mean like solar energy. Because of a lot of the provisions that Trump has. I'm sorry. Well, yes, provisions from Trump, but more so Biden, to help with renewable energy. So this the whole renewable energy thing that tied into the electric cars. So Biden has a lot of provisions in place to where, like, solar energy, electric vehicles, renewable energies, you get a lot of money back for having those things. So, having solar panels in the long run, especially starting in January or February of next year, is going to be more beneficial than having electric energy, which runs off of coal. So, the thought process is that prices are going to go up for the energy sources that people have for their electricity, especially those who have coal powered energy. You don't really know unless you ask your power company, but those energy sources are going to go up in price. So it will make it more beneficial, like I said, in the long run to have solar panels. And then the other thing I wanted to talk about before I turn it over to Mr. Levels, just really quickly, is cryptocurrency. So we have seen a huge surge in crypto during 2020. We've seen Bitcoin rise almost 300% this year. So that's definitely been a really good thing to see. Just watching Bitcoin's price, just keeping an eye on it. At this point in time, we've hit the previous high that was set at almost 20,000, broke that, and then the highs that have been set ever since then, we've just continued to break through those. Right now, price is pulling back a little bit, but we'll definitely be looking at Bitcoin to set the precedence for what happens with people and their investments going into 2021. 2021 has shown people that they need more than one source of income. 2020 has shown people that they need more than one source of income, and 2020 has also shown people that they need to diversify and invest their money and help their money to just make more money for them. So 2021 is now going to be that year to put everything into practice that we've learned in 2020. Um, XRP, XRP has been one of those cryptos that we've looked at as a breakout crypto. Me myself, everyone has a different stance on XRP right now, but me myself, I'm taking a pause on XRP solely because they had a lawsuit filed against them from the SEC claiming that they were security and they illegally sold ICOs, like initial coin offerings, which is the crypto equivalent of an IPO, which is when a stock company goes public. So with that being said, and with that happening, a lot of companies, a lot of brokerages, a lot of companies that host wallets have decided to either delist, which means like take it off the list so you can't even see it, or halt trading on it, which means you can't buy any more of it, but you can still continue to trade it between wallets or between like your friends and family. Coinbase, which is one of the really big wallets and crypto companies here in the United States, just announced a couple of hours ago that they were going to delist XRP starting, or actually they were going to do it on January the 19th at 1 p.m. Eastern time. So that really has had an effect on XRP's price. Since we've been on this call, XRP's price has bounced around 22 cents. So, like with that being said, it's a, sorry. With that being said, just make sure that you are paying attention to cryptos. If you're in the group, Mr. Levels is definitely going to be helping everybody out as far as, making sure that we're all in the right investments. I'll be giving you the news to help you go along, with that technical analysis so that you guys can make informed decisions. These links and stuff that I have up here, a lot of it I either talked about. I will put them in the group. If you're on here and you're not in the group and you contacted me before the call, I'll send you the links just so that you can see it. It was just more for visual purposes, like the unemployment rate chart. This chart just shows what it's like Republican versus Democrat and how the unemployment rate has fluctuated. The main thing I wanted you to see with this, because I've seen a chart very similar to this floating around on social media. And the one thing I wanted to tell you guys is that it does not matter whether it's a Democrat or a Republican term. It really doesn't, because as you can see, like, you see how these look like waves? The market moves in waves. Um, the market, when it comes to jobs, move in waves, because you're going to oversaturate the market with jobs, and then you're going to stop creating jobs, and then now the market's not going to have enough. So like it goes in cycles. It cycles all the time. So um, it just so happens that it might fall into one presidency more than another. But these links, like I said, I'll send them to you guys so you can have them. If you have any questions, you can type them in the chat, or you can send them to me and I'll answer them. You can put them in the group chat. Um, Also, I'm going to turn it over to Mr. Levels. I really appreciate you guys listening. I really wanted to kind of give you a recap, and then also for the new people, show you some of the news items that we pay attention to. I know it was a lot, but definitely, like, if you took notes and you have questions, just ask and let me know. Going into 2021, these are things that we're definitely going to be um, like going over in great detail during the year. So starting in January, first thing we're going to do kicking off the new year is talk about jobs. We're going to be really hitting hard on the job numbers. Every job Friday that we get, I'm going to have the charts up that are in the report. We're going to be going through these in detail, because these are things that affect not only your trades, and they're going to affect your trades, but they're going to affect your everyday life. Even if you're unemployed, even if you work for yourself, these job numbers are going to be important, because it's either going to affect your customers or your family members and your friends. So I appreciate you guys listening. Thank you so much. I love you guys for listening and for sticking with me throughout with this. I'm going to go ahead and turn it over to Mr. Level so that he can get started with the technicals, and kind of help wrap up technicals for 2020, and then kind of push you guys into 2021.
Cool beans. Man, that was action packed right there, Corman. I appreciate that. I know I was in here taking notes. If y'all weren't taking notes, y'all crazy. But fortunately for y'all, it is being recorded, so we'll be dropping it in the group, in the Telegram group, and on the YouTube channel. So I'm gonna go ahead and share my screen. I've already done my 2020 overview. Um, Carmen had never, she never did her 2020 overview for fundamentals. So I'm just gonna give y'all a quick, uh, another quick brief overview of 2020 from the technical point of view. Can y'all see my screen? Okay, cool beans. Alrighty. So looking at the DXY, which is the dollar index, starting out 2020, um, being with the fundamental expertise that Corman and I have, and the technical expertise that Corman and I have, we were selling the dollar. for all of 2020 we were selling the dollar. Reason being, hold on, give me a second. What my chart? Hold on. Which is give me a second, y'all. Having some technical difficulties. Give me a few moments. There we go. Devil busy, y'all. Devil busy. All right, cool beans. So, back to what I was saying. Being with the technical and fundamental expertise that Coleman and I have, we have been selling the dollar for 2020. Um, we started selling the dollar after we seen um the dollar run hot up here in March. Um, we knew that um, the dollar was only going to run so high and run hot and run out of steam and then start to sell off. Um, Going back to what Carmen was saying earlier when she was going over the news items, we knew that inflation was going to set in, and that's when that candy bar goes from being 89 cents to $1.09. So, as she was saying earlier, if you look over here at the dollar index, the dollar is at 90.1 cent. So, um, once we started selling the dollar, I wanted to see this low of March broken and retested. We got the retest here in September. Clean, smooth retest, and you can see for the last quarter of 2020, we continued to sell off. I do eventually have the dollar coming down to 89.1 cent. Um, and if we break this low and this low, coming to retest 88.2 cent. And there's a good possibility we could see the dollar hit all-time lows at 72 cent, but we'll have to wait and see. But in the meantime and in between time going into 2021, I expect for the dollar to continue to sell off. So with that being said, Looking at our currency pairs that we trade and that we traded for 2020, we were we was bullish currency pairs because we know that our currency pairs move in the opposite direction of the dollar. And so if we know we was selling the dollar, then we know we was buying our currency pairs that we trade. So looking at Euro USD, we started buying Euro USD here in May. And year to date, Euro US Euro USD is up about 13 13.2%. So this trade paid out quite well for the year. If you want to look at PIP wise, how we count our money in Forex, um, this paid out over 1,400 pips for the year. So that was a great trade um, trade setup and trade opportunity for 2020 that we capitalized off of. Looking at GBP USD, same thing. We know that GBP USD move in the opposite direction of the dollar as well. Um, we started, we caught GBP USD here around May. And it's up about 10%. And NZD USD is up 20%. All our currency pairs paid out quite well for the year. Um, and that's why it's so important to pay attention to these news items that Carmen spent the last hour and a half going over, because you got to have an understanding of how news and fundamentals affect the marketplace when trading. When you put fundamentals with technicals, you have a powerful combination that when you can put them together and use them, you can make money off of the marketplace at will and at ease. But you have to learn the mechanics, behind the machine. So having a complete understanding of fundamentals and technicals will give you that skill set that you need to be able to capitalize off of the forex market. So moving on to cryptocurrency, looking at Bitcoin. We started trading Bitcoin. We was trading Bitcoin before the dip, um, but we really became active in March when we seen this dip here. When we seen this dip here, um, I sent out notification. I think we was still on WhatsApp then. um, but I sent out notifications to the team at that time to, get into Bitcoin. I also posted it all over Facebook. And, I basically told the world to get in Bitcoin because this was a golden opportunity to get in Bitcoin, and we will probably never have another opportunity for this with Bitcoin at this price again. And as you can see, that was in March. Bitcoin came down to $3,800, and as the whole world know now where Bitcoin is at right now, as you can see, Bitcoin is at $26,000, $26,864. Um, and we did get all the way up to 28,200. Let me get her on there. $244. So, as you can see, I have this line up here. This price marked at 30,000. That's where I would like. That's the level I would like to see Bitcoin hit next going into 2021. Just let me fit something right quick. Okay. Yeah, so that's why I want to see Bitcoin hit next. That's the price level for 2021. Um, it may or may not get there. We'll see. Um, but a lot of speculation behind Bitcoin. Bitcoin could easily hit 50,000 in 2021. Um, it's been some crazy speculation that Bitcoin may could even hit 100,000 by the end of 2021. So we'll just have to see. Like I've been telling y'all for the longest now, whenever we see a good opportunity, um, like we seen here, and last month in November, we seen Bitcoin dip down to 16,000. That was an opportunity to buy the dip. Um, Even here, we seen it sell back down to 21,000 after this breakout right here. You buy that dip. You buy that dip. You buy the dip at 21,000. You already up almost 5,000 pips. So yeah. Um so yeah, that's what I got for Bitcoin, y'all. Going into 2021, I want to see this thing hit 30,000. Um we'll probably I'm thinking we'll probably see it sell off of 30,000, give us a dip, or we may even come back down to 19,000. Hey, if it come back down to 19,000, that's cool. I'll buy that dip. Um, but if it's just gonna keep pumping and pumping and pumping, then we'll probably see Bitcoin come back down to like 24,000. I'll buy that dip. If it come back down to 24,000, I will buy that dip and ride it up to 30,000. And then we have to see how price react to 30,000. All right, moving forward, looking at silver for the year. We caught silver here in May. Silver gave us tremendous gains for 2020. Now Silver is back at this level here. I want to see if we can get above 26.8, and if we can hold above 26.8, and then I continue to buy silver going into 2021. Looking at gold, um we've been in and out of gold for a long time. I've been trading gold for a few years now, like 2 3 years. um I was telling people back in 2018 to start buying gold at like 1300, like price level here, um back in 2018. And now gold, you see gold is at 1878. Um, Gold has gotten all the way up to over $2,000 an ounce. So for the year we were bullish gold. Gold has paid out tremendously as well. Now, um, similar to silver, I want to see gold continue to push up, break above 1950, hold that level, and then continue to push to the upside going into 2021. Looking at oil, as Corman was saying earlier, we seen um, oil hit all time new all-time lows, never seen before lows. We actually had oil to go negative, never seen before. It was out of this world. um and then they shut um all trading down. You couldn't even trade oil nowhere on on the brokers or on the exchanges or anything. So once they opened trading back up for oil, we was able to capitalize off of that around $5.86, and we just been riding oil up ever since. um I told the team at that time that I did want to see oil eventually, by the end of the year, come back up and retest $53. um we haven't quite got the $53, but if we don't get the $53, I ain't gonna be mad, because hell, we at $47 now, all the way up from $5.86. So if you look at those returns, man, those returns are absolutely insane. We're talking about 724% gains. So super dope. Um, and Before I look at U30 for the year, I just want to look at XRP. Going back to what Corman was saying with the lawsuit. Um, um, yeah, XRP is kind of iffy. Um, like she said, she's taking a pause. It's a lot of everybody have their own opinions in the trading community about what to do with XRP. Um, I'm personally, I'm holding my XRP that I got, and I want to see if XRP, what's going on with this lawsuit. So we just gotta see. XRP, you're gonna be tied up in this lawsuit for a while. You got these companies, you got Coinbase and I forget the name of the other company that just delisted Coinbase. So they halt and trading on Coinbase. So and we don't know how the lawsuit is gonna work out. They could win the lawsuit, and XRP could shoot up the freaking $500 a coin. You never know. I'm holding. I mean, it's 23 cents right now. Um, I had bought a little bit more when it came down here the other day. What was it? Yeah, the 23rd. I bought something here, came down on like 21 cents. And now I'm just holding. So if you got XRP, you can decide for yourself whether you want to sell all your XRP and get into something else. Like I tell everybody, it's hundreds of cryptocurrencies out there, hundreds of them. Do your due diligence. You know, um, I'm here, Corman's here. Um, we can help you um, learn more about these currencies, these these cryptocurrencies, and educate you about them, and so you can be able to make a informed decision on whichever currency you decide to get in. Um, but like I have like about 12 different currencies on Coinbase. Coinbase will give you cryptocurrencies for completing certain tasks on their website. So like it's hundreds of cryptocurrencies out there. So like I said, just do your due diligence and buy you some, because you never know which ones are going to end up paying out major dividends in the long run. Hence Bitcoin. So um speaking of other cryptocurrencies, if we look at other cryptocurrencies I was telling people about and I told the team about back in March, let's look at Ethereum. Um, it's crazy because Ethereum is actually outperforming Bitcoin for the year. If we look at the growth um, in March, Ethereum dropped all the way down to 88, 89 cents. 89 cents to date. Right now, Ethereum is at $700.20. I mean, $720. I'm sorry. So you do the math. So there's astronomical returns, man. Astronomical. So Ethereum is actually outperforming Bitcoin, and you don't even really hear a lot of people talking about Ethereum. I mean, of course, people in the crypto world is talking about Ethereum, but you know, if you look on your Facebook and your Instagram, all you see is Bitcoin, and you hear a lot of people talking about XRP, Ripple, or whatnot. Mostly because XRP is so cheap, but you rarely hear or see people talking about Ethereum or this next one I'm about to click on. Litecoin. Told the team and told everybody about Litecoin as well back in March. Um, Litecoin fell all the way down to $25 in March. Um, to date, right now, Litecoin is at $129. So the returns aren't as astronomical as Ethereum and Bitcoin, but those are still astronomical returns. Like $25 to $129 right now. It's over 400% returns. It's like you don't get returns like that out of any other investment. I don't care what you investing in. I don't care real estate, stocks, whatever. You don't see those kind of returns. That's insane. This was literally the opportunity of a lifetime, and so many people missed out on it. And it's disheartening to me because I tried to tell so many people about it. But it's all good because going into 2021, we gonna do it again. We gonna find great opportunities. We also gonna start looking at stocks. We gonna find great opportunities in the stock market as well, and we gonna capitalize on it. We gonna teach this information to our C's. They're gonna teach their C's, and we gonna start breaking some of this generational dysfunction that we got going on, y'all. So, with that being said, I can finish this thing off by looking at U30. We jumped into U30 kind of late in the year around June. However, when we did get into U30, we started buying U30 up. Wanted to see U30 come back up and retest pre-pandemic highs. We can see we got that retest right here in November. And then price did break above, and now we can see U30 continuing to push to the upside. So I do expect to see U30 continue to push to the upside because we have broken pre-pandemic highs. U30 being in overall uptrend. I don't see it not I don't see it not being in the uptrend because like it's stocks tend to go up. So if we look at the historical data for the last 10 years, U30 has been going up. We have incidents where um, we have recessions and we see sell offs. Um, Pandemics like we seen this year, we see this bit sell off. But for the most part, we see the market stays in an upward trend. So I expect it to continue to stay in an upward trend. However, with that being said, we will see volatility in the market and we will see the market pull back. Um, and we will take advantage of those opportunities. So, yeah, that'll pretty much wrap up the overview for 2020 and the forecast going into 2021. If anybody have any questions, y'all can drop them in the Telegram group. And as always, I appreciate everybody tuning in. Let your family and your friends know you love them while they still here. And as always, man, peace and love.